freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, what's up today?
Hey, Dustin. Excited well, we've got some projects we're working on, and we've been talking to a lot of investors, and so I think we've got some interesting topics that we want to talk about, but in regular life, I feel like we're just kind of wheeling and dealing a bunch of deals. We've got more deals than I think we've got investors right now. So
you've got a you're flipping a house right now, right?
I am flipping a house right now. Yeah.
How's it going?
It's going well. We've got the back walls completely fixed, and it was like the chimney was taken off by the previous owner. So a bunch of any of the big stuff was fixed up front. Now we're just trashing things out and cleaning up and hoping it's a 30-day turnaround to be on the market.
Nice. You posted any photos online or anything to LinkedIn or anything?
No.
Okay.
No.
You should do that because
I put some on my MySpace.
Okay.
Yeah.
Who's your top?
Tom.
Was it? Oh, yeah. Well, Tom's on everyone's. Who?
No, Tom's my friend.
Tom's my friend too. Was it the top? I can't remember. What was the number now? Was it 7, 5?
I think it was 6.
Oh, man, I had a MySpace. That's crazy.
So
okay.
did I.
That has absolutely nothing to do with anything we want to talk about today. But no, you referenced really quickly. We've been having a lot of investor conversations, and that was kind of the genesis of the topic for today. Is just something that's come up somewhat. I think it's come up in more of conversations of folks that I've talked to, Adam. I think instead of folks that you've talked to, but especially for anybody with a more corporate background or folks that have worked, within the corporate system and kind of followed the rules, right? Went to school and got a good job and climbing the corporate ladder. I think sometimes when you get exposed to the space that we play in private placements and private real estate investments, it's different. There's some things that are different about this type of investing than you may have been used to in other things like through a brokerage account or something like that. So a lot of times that can lead to, again, questions because it's unknown. We've seen investors where obviously it creates some hesitation, and rightfully so. I certainly don't fault anybody for being hesitant about investing in a space or something that they don't understand. So we've certainly talked a lot about that. You gotta understand it, but I think we take for granted now the knowledge that we have, and that this is much more common. And I was talking a little bit before we started recording here. Was telling Adam that, I take that knowledge for granted now, but 10 years ago, I had a finance degree and had no idea that people were even doing this, that you could invest this way, that this entire space existed. I had no clue.
Which is probably why I'm always a little shocked, or maybe the people that I know more, the circles I run in, don't have some of the same questions yours do, just because I have no finance degree. And, straight out of college, this was the only stuff I invested in, right? Everyone I knew invested in real estate or had an understanding of this type of thing, or a lot of the investors I've met have been at conferences where maybe they already have a good grasp of these types of things. So
I think, too, you end up talking more. I think I talk more to people who are employees within businesses. I think you talk more to business owners and
probably
entrepreneurs.
In general. Yeah.
And so that's something that if you've only ever been an employee, you've never owned or ran a business or been exposed to some of these ideas or these I hesitate to even call them ideas, just the legal concepts, but the way that deals are structured in this space. If you've only ever gone to school and worked a job, you've never had any exposure to it, and so it can be kind of shocking, and it can seem like this mythical space, and there's all sorts of things, and you'll hear about so-and-so has an LLC, and that seems risky. And so it just, there's almost this like perception of this space that is not at all the reality of the space.
Well, I think there's a few things. One, I think it's some people just don't like the unknown. We're not attorneys or financial advisors, right? So, consult your own, but then the next thing I'm going to say is your financial advisor is probably a pretty person to talk to. Most of them are working for fees. Not that we're not, right? We take profit share and we take fees and all those things, right? It's all disclosed, but most investment advisors are taking their 2 and 20, right? They're taking 2% of your money every year and then 20% of the profit. So if they tell you to go invest in something else, they're losing some of their income. And there are very few, actually there is one investment advisor I have ever met who is happy to refer people to our deals. He's like, dude, I love what you guys do. I love this space. It's good for my investors. I don't care if I make 2% less on $100,000 off of, it's even $1 million of people, right? 10 different people at $1 million. He's like, it's good for my investors. They're going to make money and then they're going to put more money back in their stock brokerage account. It's fine. But that's not the way most investment advisors work. And most investment advisors, I think, don't truly understand this space themselves, right? And I think this comes back to something I think Robert Kiyosaki said in the cash flow quadrant. He said, ask your stockbroker how much of their income is based off of their stock portfolio versus their fees they make managing your stocks.
Yeah.
I can tell you right now, most of my income does not come from my money I make off of syndicating real estate. I mean, at some point it will pass, right? I will make more off of revenue share just because we buy a lot of buildings. But that's not how I started in this space. It wasn't making fees off of other people's money, right? It was doing real estate by myself, for myself, and then expanding that out into other people. I think if you find a financial or investment advisor who's making their income off of investing, they're probably the best financial advisor out there, and they're not going to be concerned about you taking some of your money because they have their own portfolio that they're happy with living off of.
Yeah, you're spot on. And that's those, oh man, this could be, I have a lot of thoughts and opinions on this. This could be probably an episode in and of itself. But I think this kind of gets to the root, this whole topic gets to the root of the question that I've heard and that I personally asked myself. It's like, okay, well, if this is such a great way to invest, why has nobody told me about it? Why did I not learn about it? And we can go from the conspiratorial answer of like Wall Street's in it to keep all your money. They want to make sure all your money stays in Wall Street, and I'm sure there's some element of that. I'm not saying that's there's some grand conspiracy here, but at the same time, most of the people who the vast majority of other people look up to is the financial advisors and the person that has the credential, right? The CFP every CFP.
I know you said all these acronyms earlier. I'm like, I don't know what any of those are.
Sorry, the Certified Financial Planner.
Okay.
And you can generally know one because it'll be in their name on LinkedIn. They'll have it in their actual name.
Okay.
You can generally know that. But I know a lot of folks and I've heard this. I've heard this from folks that we've talked to about investing before. They're like, well, I've got a guy and he does really good and he's got a CFP. So like, why hasn't he told me about this? Or oh yeah, I mentioned this to him and he said this space is really, really risky and I should stay out of it. And I think, again, there's a wide variety of reasons for that. I would actually love to hear from a CFP. If there's a CFP that's listening to this and wants to, well, we'd love to have you as a guest. I think that would be a fascinating interview. But I've done a little bit of studying on like the study curriculum for the CFP test, and 90% of it is focused around brokerage and other public investment. And there's a lot in like insurance and annuities and some of those products, right? But like that's where the vast majority of the information that someone who has a CFP, that's what they've had to study and learn. And then there's one tiny section called alternative investments that briefly speaks on real estate and precious metals and some of this. And from what I've not sat for the exam, I've not fully studied for it, but from what I can tell from looking at some of these outlines, it's very much treated as this thing about, you should know this is a thing that's out there. It's just a thing. Here's some basic information you need to know. You really don't need to worry about it that much. And that makes sense to me because the vast majority of the CFPs that I've ever talked to about this, that's how they treat the space. And I honestly do believe a lot are very well-meaning. They are trying to, right, wrong, or indifferent, they have been taught and they've just accepted that this private investing space is very, very risky and that this is just the fastest way to lose your money and that you should stay with the people who invest in registered securities and the folks who have all the certifications. I think most are well-meaning because that's all they've been told, and they've just never taken the time to actually dive into it and learn about it for themselves. I do know, interestingly enough, the guy that's the financial guy for my parents is also, he doesn't talk that much about it, but he's a GP in commercial real estate deals. He's done several self-storage facilities around here, and I know when he most of his investors don't fit the profile of investors that would be good LPs in those deals. But I know from experience, when he comes across somebody or he has a client that would be and it makes sense, he'll absolutely be like, "Hey, I think this would make sense for you." And so, Adam, to your point earlier, he's, I think, one of the good ones who does recognize that, like, it builds good. If you're doing good deals, it builds goodwill to point people to places that are going to treat their money well, whether that's ran by you or not. So I'm going kind of long here. On the other thing I'll say is there's the education side, right? Like what people believe about the space. And then I do think there's an inherent conflict of interest. Adam, that was the first thing you said, right? Like, if you've got someone who's running money for you, they have a financial incentive to keep that money in their accounts, because otherwise that they're gonna lose the profit, they're gonna lose the asset management fee. Now, again, I think the abundance mindset is, no, I'm going to give my clients what I think is best for them, and that's going to increase everything over the long run. But that can be a tough decision to make when you got a client that's like, well, I'm gonna pull out $200,000 to go invest in this deal, and they're like, shoot, man, that's $4,000 a year of income that just evaporated. And so, anyway, I think there's some things you have to kind of understand, that yes, those are the people with the certifications, but they're also, I think you need to understand a lot of their background. They've been trained, they have a lot of times finance degrees like I had. I was never trained in this space. I had no education whatsoever. Like, nothing in any of my undergrad covered anything about private placements. And the tiny little bit where I realized looking back now that it was talking about this, it was talked about in the context of, here's what BlackRock does. Here's what the other billion-dollar hedge funds do. It was never talked about that, like, regular people could invest this way. And so, again, I don't know. We're going long. I'll stop there.
I think really maybe the next topic on this that we want to talk about, right? Most people listening to this podcast or that end up here are interested in the space, right? So let's just say you're past the talking to your financial advisor. There will be a push, especially if you're moving to liquidate the money. It'd be funny, I think, if you're ever trying to liquidate the money from your portfolio to do this. I wonder how a financial advisor would respond if you said, "Hey, I'm pulling $100,000 out to do a private placement," and then they say, "Oh, no, that's bad, that's risky." And then, like, 6 months later, say, I'm redoing my kitchen. I need $100,000. I'm guessing the kitchen, they're gonna be like, "Oh, okay, here you go," right? That's a horrible investment, right? You don't need to spend $100,000 on your kitchen, right? If you got tons of money, do it. But, like, if you've got a $400,000 or $500,000 portfolio, it's a bad investment.
Yeah.
And I bet the financial advisor would be like, "Oh yeah, kitchen, yeah, So anyway, that just popped into my head. But
I really want that Wolf stove, though.
Yeah, you do.
Yeah.
With the red handles. So the second thing, though, is once you get into the space, right? Dustin brought up earlier, some people have some questions about how it's structured. And I think the 30-second version is, it's structured the way everything in this country is structured inside of an LLC, right? The company you work for is most likely an LLC. If you go talk to any attorney and you buy a rental property, they're going to tell you to hold it in an LLC. So that's what we do. And an LLC is just a structure that owns, once again, I'm not an attorney, a structure that can own assets and is owned by someone, right? And it's a layer of protection. In our case, outside of it being a layer of protection, it is a vehicle for structuring ownership percentage. No different than when you go buy a share of Apple. It's a little different, but let's just keep it simple. But when you go buy a share of Apple, you have a certain percentage of the company, right? When you buy into a syndication, in an apartment building, you buy a share of a company. So if me and Dustin were going to go buy an apartment building and it's $1 million, right? We both need to put $100,000 down and get an $800,000 loan. I could put in $100,000. Dustin could put $100,000 as our initial capital into this company, our initial contribution. and we will both own 50% of the shares of this company. Then the operating agreement just spells out how the capital gets distributed, how the bills are paid, who has voting rights, what happens if there's an argument, what happens when you sell, all of
What
those
happens
things.
if someone dies?
Yeah, what happens when someone dies? I mean, it's just an operating agreement, right? It is a thing that you never look at until there's a disagreement on how you do something. That's how most attorneys describe it, right? Like, oh, me and Dustin are both in agreement with what we're doing. We're not looking at the operating agreement, right? But as soon as one of us says, no, that cash was supposed to go to me, oh, well, let's go look at the operating agreement and see what we decided on before we were mad at each other. So I think it's just an agreement for how this company is going to be run. And so that's really what the underlying vehicle is for when you do a syndication, right? An LLC is not a scary thing. It's a partnership, right? It is very common. Most people in real estate probably have 3 or 4 or 5 or 6 LLCs, maybe more. You know, if you look at someone like Ken McElroy, I'd be willing to bet he's in the hundreds. Somewhere in that range. I don't know how many assets he has, but a lot of different things. I mean, if you go buy a jet, you're going to put that in an LLC, right? Because you don't want the liability of that jet crashing into someone, hurting you, right? And you're probably going to lease it out to your other companies. I mean, that's a little off, but all of the thing, an LLC is just a way to limit liability and spell out how that company is operated and then its assets are managed.
Yeah, it's not a scary thing, and like I understand, because I came from this background where I was never exposed to any of this, and it can seem like you always hear the negative stories, right? About, oh, so and so had an LLC and they were sued, or maybe that's like you can think of any number of like terrible things that you could think of.
Sounds great to be sued by the LLC compared to being sued personally.
And that's exactly. And that's generally the benefit, right? Like you would want that. But it's not like, again, I get that when we talk to investors and there's some hesitance around this because it's new. I get it being new. Like it was new to me. But to Adam's point, one of the things that I quickly realized was like how common it is. And like this is just the way that everything is structured. And if you work for a company, you are an employee of a company that's structured in some variation of what we just described. And maybe it's a C corporation for tax purposes, but it's incorporated, right? It has shareholders. If it's an LLC, you're not incorporated, and you have members or unit holders, which are effectively the exact same thing. And so again, that's the point I always try to make to investors. It's, yes, I get that this is new, but it's also nothing scary. It's not something that's weird or this like unique structure or something that's special. Like this is how business gets done, deals get done, properties, all sorts of assets are purchased.
Most bank lenders require, if you're getting a loan for a rental property that is in an LLC, because it's a business loan.
And it shields liability from their side that something can happen to the asset. Yeah. So again, I get it coming from a view, if you've only ever been a employee of a company, you've never ventured into this space, some of this can be new, but definitely take some time to educate yourself, but also understand this is very common, and this is how business gets done in the US. I think a related topic to this, and Adam, maybe we'll make this the last one. I've heard a few times where people have asked, well, wait a second, so-and-so told me that what you're offering here is an unregistered security, or you're playing in unregistered securities. And that sounds really scary. And why aren't they registered? And your unregistered securities, the SEC doesn't know about them, and they don't have any of the SEC protections that my stocks have. And I'm signing my life away when I sign these documents. So I want to hit that topic because there's truth there that I think is mischaracterized, is probably the best way to describe it. I don't know, Adam, what you got any thoughts on that to kick that off?
I mean, my first one, and chime in if you think I misspeak at all, is that it is an unregistered security because the SEC says it has to be an unregistered security, right? We are filing under an SEC regulation for most of our deals, which is Reg D 506 B or C normally is the exemption we are using, and it's an exemption from registering a security. because that's what the SEC told us we had to do.
Yes,
So
the SEC said that we could, as long as we followed rules that they very explicitly set out, we did not have to register the security. And when we talk about registration, it's not like, oh, you fill out a form and submit it and you're done. That the registration process is effectively like taking a company public. It's a months-long process.
Hundreds of thousands of dollars.
Yes. Attorneys and CPAs and all manner of people get involved in this. And so it's very, because of the lift and the time required to do it, it's very impractical when you've got 60 days to close on a real estate property. You
and
can't
I would say
register.
That the SEC does know what we're doing for the most part, because we are filing under their Form D regulation, EDGAR filings, telling them how much money we're raising from how many people and in what states.
Yep. And that's the other thing that I bring up is that, yes, these are not registered in the legal parlance of what a registered security means to the SEC, basically meaning that it's a public stock. But the SEC, they are known and are identified to the SEC. In order for us to follow the SEC's regulations, we have to submit information about the securities that we're offering. And we say, hey, this is a securities offering. We're offering this investment to our investors. Here's how much. We are using this exemption from registration. And so we claim to them and we say, hey, we want you to know that we're doing this and we are claiming this exemption. And that way there's any sort of, if there's anything in the future that comes back, and actually you can, I told this to an investor the other day, the EDGAR filings are public. You can actually go online and search for some of these filings. Now, a lot of times you have to know the name of the entity and some other information that you might not know, but if you did want to double check on a sponsor and be like, hey, have you actually done this? You could do it. You could ask them for the name of an entity and go search online in EDGAR and find the associated filings for it for a previous deal. Keep in mind, for future deals, they're not filed really until the raise is underway. So, I think that's the big thing is like a lot of folks, and again, I've seen this vilified from financial planners. Again, I don't know if this is with malintent or if they're just misinformed, but they'll try to make a big deal about it being, oh, these are unregistered securities, and that makes them super risky. And they are unregistered, but that's a huge mischaracterization of what it actually is. And just because a security is registered or unregistered does not make it really has no bearing on its risk level.
Yeah, I think that's super good. If anyone's enjoying this content, please like, subscribe, leave us a review on Apple. But Dustin, was there anything else that you wanted to touch on this?
No, I think that's it. I mean, we've kind of hit the high points on this. I think if anyone ever has questions on this, or you want to reach out and talk more, again, we're not attorneys, we're not financial planners here. We've talked to a lot of attorneys, and we feel like we're repeating things that we've heard attorneys say. But at the same time, everyone should obviously do your own research. But we're happy to share ideas. We're happy to share how we approach this, how we view things. So if you've got questions, reach out. We're always happy to have a conversation. But yeah, Adam, if you don't have anything else, we can get on out of here for this one.
Oh, awesome. Thank you, everyone, for being here.
All right. Thanks, everybody. We appreciate it. We'll see you on the next one. Just remember, where freedom leads, real wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.